Today's Tuesday, June 4th, and although the stock market will start trading in under an hour from now, this is a trade review on a position I just took a little while ago involving the micro crude oil futures, ticker symbol /MCL, and as of the time of this recording, the spot price for oil is $72.98. And since the futures market started trading last night at 6 p.m. Eastern, oil is down $1.24. So from this chart layout, we can see that oil hit a high of $80.62 last Thursday. Since hitting this high, price has fallen drastically to hitting a low of $72.48 during the pre-market hour. So along the way, I've marked up reasonable support and resistance levels via the blue horizontal lines. And essentially, it appears, from my perspective, that the current market structure is inside this regression channel. So the upper yellow is acting as a layer of resistance. The bottom yellow is acting as another layer of support. The dotted line, which is running center down this channel, is acting as both support and resistance. And we can see that price has just been weaving in and around this dotted line as price has been trending to the downside. However, right here, since about 3 o'clock, 4 o'clock this morning, price seems to be stabilizing. Price just seems to be going sideways at this point. So this could be a consolidation phase. So right here, and considering that price is now heading towards the upper half of this box, I entered a long position, meaning I'm now bullish on oil, anticipating that it's probable that price could break above this dotted line, which is acting as resistance, as well as this local resistance level sitting at $74.35. So I entered a long position, meaning I'm bullish on oil. I went long with 2 futures. My entry price came out to $72.88. So this line is just a visual markup as to where and when I took the long position. And here, right here, this bubble, it's a insurance policy to close out the trade if oil continues pulling back. So if or when price falls below $72.53, that's where this stop order is sitting at, this order will get executed, capping my loss to about $70. Now, on the other side of the trade, if my assessment is correct and price does manage to break above these 2 resistance level, as well as this resistance level up here. So there's actually 3 resistance levels that price needs to break above. So here, if price breaks above $76 even, then this limit order will get executed for a profit potential. And I forgot what the amount was, but if I open up Active Trader, my entry price is right here at $72.88, which is what I marked up on the chart. The number of futures I went long, which is 2. And if I scroll down, my stop order is sitting here at $72.53, capping my loss to $70. And again, if I scroll up to $76, that's where my soft target is for oil's rebound or potential rebound. If I just scroll up here, so it's at $76, that would equate to a $624 profit potential if price manages to get up to this point. So that's the current status. So if oil starts breaking to the upside, what I want to do is I want to walk my stop order higher as price starts to rebound. So much so that I want to have my stop order sitting slightly ahead of my entry price. So this way, if oil comes back down and closes me out, then I'm at least guaranteeing that this is a risk-free trade. And if I do get closed out, I want to be closed out at a profit. I don't care if it's $1, but I want to make sure that this is now a risk-free trade if price does start creeping to the upside. So what I'll do is I will pause it here. I will do a status check if or when price does retest this $74.35 resistance level. So for the purpose of time, I'll pause it and I'll be back hopefully in a few hours. So, quick update: the futures market has restarted trading. Actually, started trading almost an hour ago. So, even though the calendar is showing June 4th, this is officially the trading session for Wednesday, June 5th, and the spot price for oil is $72.92. And since the futures market started trading at 6 p.m. Eastern, oil is down another 33 cents. So price really hasn't done much. Price did break out of this consolidation phase, but was rejected by this dotted support resistance level. I'm going to call it that. Now that price is essentially at my entry price, I added a third futures. So I'm now long three futures at the same entry price. And if I open up Active Trader, right here is the number of futures is a +3, and my entry price is right here, which is still the same zero line. So now each tick up or down is now it goes up an increment of $3. So it's essentially $1 per tick, but because I'm long three futures, the multiplier is 3. So that's why for every penny move up or down is a profit or loss of $3. And what I did was I moved my stop order just a bit lower. It's now sitting at $90. So I'm risking $90 or $30 per tick, per futures. So I'm still bullish on oil. Possibly we might see this move breaking above this dotted line, considering that it's essentially almost right on top of it right now. And the reason why I added a third futures is that I thought this was a bit more cost efficient, because I was looking at the option chain, and had I selected option contracts that expires this Friday, just to elaborate. So I was looking at the $74 strike price, and originally, or a little while ago, it was quoted at 46 cents or $46 per contract. Had I picked up three contracts, that still would have cost me around $140. So I thought staying with the futures was a bit more efficient at this point, considering there's not that many days remaining before these weekly contracts expires worthless. So I thought I would just stay with the futures and just increase the risk just a little bit more from a futures perspective, but from the options side, it was a bit more efficient. So that is the rationale for adding a third futures long. And also, I'm waiting for price to actually cross over this dotted line. It's possible that's when we'll see a stronger move to the upside. Possibly that may occur during the overnight session. And hopefully before the stock market opens, starts trading tomorrow morning at 9:30. So I'll pause it again and I'll pick it up in a few more hours. So, quick status check. Today is Monday, June 10th, and as the stock market is a few minutes into the afternoon session, the current spot price of oil is quoted at $77.42. And since the futures market started trading last night, oil is up $1.87. And what I'm showing here is that price is now retesting a local resistance level I had marked up at $77.51. So there is a probability now that price may consolidate right here, similar to what happened heading into the end of last week. So at the same time, what I've done is I've walked my stop order to $75.70. This right here is just an alarm to notify me if price does break to the downside and crosses below $76.38. But what I'm going to do is I'll most likely just move my alarm up a little higher, because if price starts to struggle to break above 77.51, then I may walk my stop order just a little higher. So if I open up active trader, the trade is now up $1,362. And if I scroll down to my stop order, the stop order is sitting right here at $75.70, which is a $846 take profit. So if for some reason there's a violent spike to the downside and closes me out at $75.70, this is my net profit right here of $846. If anything, I'll just round it up to like a little over $850 or possibly even to $900 now that price is at this price level here. So I'll make these changes offline. I just want to continue tracking this and protect the profits as best as possible. So that's the current status. I will pause it again and I'll be back. So it's been a few hours. So even though the calendar is showing June 10th, as the futures market started trading 56 minutes ago, this is officially the trading session for Tuesday, June 11th. And as of the time of this recording, the spot price for oil is $78.10. And since trading started at 6 p.m. Eastern, oil is up an additional 36 cents. And here we can see that oil broke above 77.51 resistance level. And if I open up active trader, the trade is now up $1,566. So as price is now at this level, I've amended my close order into a conditional order, which means I have two open orders. So the first order, I've walked my stop order to the support and resistance level of $77.51. So if I scroll down, that's a protection of $1,389. And the other order is sitting at the next support and resistance level that I had marked up at $80.67. And if I scroll to that price point, that's a profit potential of, where is it? I just had it. Okay, so $80.67 is a profit potential of $2,337. So I don't know if oil is going to get this high, considering I've been in the trade for about a week now. So I got into oil last Tuesday at this level right here with this white horizontal line, and price has broken above two resistance levels. I'm not sure if oil is going to get up to this third, but anyway, I have price surrounded. So whichever order is filled first will automatically cancel the second order. And until one of those two orders is filled, I'll pause it again. And the next update will most likely be the last. So I'll be back. So the last update, we can see that oil fell below my support level of 77.51, and I am out of the trade. Here's a confirmation bubble indicating or reflecting my liquidation of those three futures at 77.51, and this was at 5:28 a.m. this morning. So price did break to the downside, closing me out. And if I open up active trader, it's zero. I don't have a position anymore. But that was a net profit of $1,389 for this move to the upside. So I just took a measure of that. So from my entry price here at $72.88 to where I was closed out, that is a $4.63 move to the upside, or a 6.35% move to the upside. So the trade exceeded my expectations, but I will look for another entry for a potential long, or I'm just going to sit back, watch price action dictate whether or not price wants to come back down and retest 74.35. So what I'll do is, let me just get rid of these confirmation bubbles. So what I'll do is I'll just sit back, continue monitoring the price action of oil. So until the next trade, I'll see you.